Baytex Energy has been making huge waves with investors, with some claiming it can reach as high as $11 a share in the next couple of years. That would represent a 300+% upside for an investment today. So in this video, let's break down why these investors think this, what Baytex is doing to sort of perpetuate this idea, and what I think I personally am going to do with this position. So we got to start with some numbers here. Baytex Energy is currently sitting at a market cap of just under $3 billion. They have revenues right now of $3.3 billion and an EPS of a loss of about 40 cents a share. All of those numbers look pretty good. Obviously, with revenues higher than their market cap and a negative EPS, you might be thinking to yourself, what is this guy talking about? This company is unprofitable. Why would he be talking about them so positively? Well, let's get to the good bit. They currently have a plan to return 50% of free cash flow to investors and use the other 50% to pay down debts. This could be an absolutely massive return of capital to investors, particularly when you remember their revenues are higher than their market cap. And this is where it's really important that we understand the difference between free cash flow and earnings per share. With companies like this, there are so many moving pieces that go into the earnings number. You talk about depreciation of assets, talk about interest payments, and so much that the earnings per share number often looks a little bit worse than reality. In fact, this company has free cash flows of over 50 cents a share, which, while not huge, is definitely positive. And if you think about half of that, so 20 cents a share, going directly to shareholders, and half of that going to pay off debts, which do make up a big part of what is sort of holding this company back, you could see things going pretty well. But 20-something cents a share doesn't sound like such a huge deal. Why are investors saying this thing is going to 3x? The best part of this story is that management themselves have laid out a specific plan to double, more than double their free cash flow per share to over $1, about $1.11 a share by 2028, which is just really 2 full years from now. This would mean if they followed through and kept returning 50% of free cash flow to investors, investors would be getting back more per share than the current free cash flow of this company. Now, in order to understand really where the explosive move in stock price might come from, we need to talk about valuation. Right now, this company is trading at about 7.5 times free cash flow, with analysts arguing that actually, if they can demonstrably prove that they can continue to pay down their debts, they can return value to investors, they can continue to run these really high quality assets that they have cultivated in the last couple of years, well, analysts think they should actually be priced somewhere in the 10+x free cash flow. And if you remember, free cash flow is doubling, which on its own should represent the stock price doubling. But with free cash flows doubling and analysts expecting that free cash flow sort of valuation number to expand, you're going to see some really parabolic moves. So far, we have a story of a company that is able to, at current values, return a huge amount of money to their shareholders, that has a pretty low market cap when compared to sort of their revenues and their profitability, and that has a concrete plan to expand that profitability dramatically. I am talking parabolic expansion in free cash flow. So you might be looking at me and wondering, well, what's the catch? There's got to be something. And that's where we need to talk about a few key risks. Now, obviously, with any company, there's operational risk. What if they mess up? What if management of this specific company does not execute? Their plans fall short. They cannot continue to operate as profitably, or they actually fail to operate in some way. Obviously, operational risk is always there, but the big one, commodity risk. And really, I'm going to tie this into market risk because it's 2025. This is a Canadian company. Obviously, the energy market, an export dominant energy market, is maybe not where you want to live right now. And that market is really sort of balancing on the brink of what seems like it could be ruin or it could be greatness. Now, I'm obviously on team greatness. Anybody that's watched my videos knows I'm really bullish on the energy market. I think this is a great time to be buying because thanks to all of this sort of uncertainty, people aren't willing to bet big on these companies, particularly ones like this. If you think about it, they're just profitable. I mean, on an actual earnings ratio, like their actual earnings show unprofitability. Free cash flow is a whole different story, right? They're free cash flow positive, but the earnings, not so much. So it makes sense that big funds and analysts and defensive-minded investors are probably not willing to risk anything on a company that's just profitable at a time like this. But those that are, or those that have a specific part of their portfolio set aside for companies that are undervalued, that have huge, huge potential upside, and that have actual concrete plans. This is not a moonshot. They're not trying to reinvent anything here. They're simply going to continue operating the way they have and return huge value to shareholders. For investors that have a little space in their portfolio, a little money earmarked for that, this could be a fantastic play. I personally am going to have a little bit of money in this company. I have heard from lots of you that watch this channel that you will have, or already do have, money in this company. You believe in it for the maybe medium term. Let's call that 2028, 3 years, medium term. Now, I understand that there is a lot more to this story than what I'm talking about here. If you want to talk a little bit more about this, you want to share your thoughts, please drop a comment down below. I love to talk about this stuff. And it's always easy, right? When we can get a little bit of a discussion going, we can talk about some of the intricacies. If you guys would be interested in seeing me like dive a little deeper into sort of the nuts and bolts of this company and what exactly they're doing so well, I'd love to do that. Just let me know. And if you made it this far in the video and you're interested in this kind of stuff, please do subscribe to the channel, like the video. It makes a huge difference, doesn't cost anything. I talk about stuff like this, particularly Canadian stocks, but I've also been talking a little bit about some American stocks. So I think there's some really interesting opportunities in the sort of broader market. I talk about that stuff every other day, just about, on this channel. And so I'd really appreciate your subscription. And if you like the video, it means a huge amount too. And with all that being said, I hope I see you in the next one.